Welcome to Dragonfly Trading. My name is Carrie. I'm a full-time trader, mentor in the crypto and Forex markets. Today's video is going to be an update on Bitcoin, XRP. We're going to take a look at the DXY and the SPX. Not financial advice, of course, just the way that I see the market. All right, announcement to make before we get started. A few more days, I'm going to extend the sale out of the course. I've been asked by a few subscribers, so I'm going to do that. But don't wait, get the course. This is the biggest sale I've ever had. I've also got discounts on the Discord. 3 months, you get a month free. 6 months, you get 2 months free, and so on. Just take a look at my website. The link is in the description below. All right, Bitcoin. Okay. The one thing that I mentioned in my last video that we definitely want to see stay is this divergence, this downward motion and this upwards motion. Even if Bitcoin decides to come deeper, we want to hold our weekly bullish divergence. We don't want to lose it, because what that would mean is that it would need to make it again. So it would roll over, come up in 3, so that when it comes down again, it can create it again. We don't want to lose it. This is the count that we have been looking at for a very long time now. The question is Bitcoin going to be able to hold the expanded B pocket, not come through the 1.618 at $14,050? Yes, it can touch it, but it can't close a candle beneath it, not even a 4-hour candle. Pivot to the upside and give us a partner leg for this white leg. If it can hold the expanded B pocket, which is these two extensions, and continue upwards, we could make it all the way to 40,820. Until we come over 40,820, we will not consider the market bullish. We will need to take out the 1.618 to consider that we are going back bullish. The opposite direction is that Bitcoin is going to continue down for a deeper Z wave. We will talk about all of this and how it can take place when we get to the lower time frame. Taking a look at Bitcoin and diving in a little deeper, I have come up with an alternate scenario. The alternate scenario is that the Y wave is just deeper. That we had an ABC at the top for W, 3-wave move for X, and that we now have a zigzag that is potentially ending in an ending diagonal. Talk about it a little bit more on the lower time frame. All right, let's talk a little bit more about the diagonal. Would have 3 waves for 1, 3 waves for 2. When you dive deep into this leg, it is possible to make it 3 waves. We need to pop to the upside for a wave 4 that does not take out our wave 2, but yet comes into the wave 1. Coming over 21,478 would invalidate putting in the wave 4. And then come down for 3 waves for a 5, and we could potentially have an ending diagonal for Bitcoin. Now, this is projecting ahead, but it is possible, and I wanted to present this idea. Okay, this is the option where Bitcoin is going to continue upwards for a C wave that could make it to 30,000 or even 40,000. This would be an expanded flat. Would need to hold the 1.382 at 15,302. It can come a little deeper, but we cannot come into the $14,051. It will invalidate it. Really, it needs to continue up from here, or one more rollover that doesn't take out the 1.618. We'll talk about this little push to the upside when we get on a lower time frame. Of course, there's always a bear scenario where Bitcoin is coming down for a deeper Z wave. What would happen is this wave will truncate at the 618 or any one of these extensions above, and then pivot to the downside, giving this leg a partner. Basically, we would have a flat in the middle, and then down it would go for an ABC. We'll dive a little deeper into this wave on the lower time frame. All right, let's take a look at these scenarios. The first scenario is that the market has bottomed here for the B wave, and that we're coming to the upside in a bigger C wave. We want this to be a wave one. We want it to either hold where it is at right now or hold the 618 extension at 15,958. Now, of course, complete invalidation is this low, but coming under the 618 would not be good. It would probably lose support. Push up for a third, fourth, fifth. Take out the 1.618 at 18,967. Get on top of it. Then it would pull back for a wave two and launch to the upside for a much bigger C that could get us up to that 30, 40K mark. Let's talk about the X wave. The way that it would create an X wave is that it makes this a three-wave move. That it doesn't get past the 618 and rolls over, giving this leg a partner leg, coming down for that Z. There's one scenario left where this was the bottom of a third wave. We are creating a fourth wave that cannot come over the 0.5 extension. Coming over that would put it into its wave one, which is an invalidation. And then it rolls over for a wave five. At that point, the market has a chance to move to the upside if it does not take out the expanded B pocket that we talked about on the larger time frame. So let me recap this so you understand, because that was a lot of moving parts. We are currently in this consolidation. It is either just going to create a three-wave move that puts in a fourth, not coming into the wave one, and rolls over for a fifth wave. If it can stay out of the 1.618, then it can pivot to the upside in the big C wave. Option two, it creates a little bit bigger wave coming into the wave one, which would create an X wave, and then roll over. And at this scenario, it would take out the expanded B pocket. And the last option is it has created a wave one. It is pulling back for a wave two. It's going to rip through this insufficiency with a 3, 4, 5. At this point, we wouldn't want it to reject in resistance. We want it to move higher to 30, 40K. It would need to pull back 0.5, 618, and then launch for a bigger wave. This would still be considered an A, B, C wave. Okay, let's take a look at XRP. The most important thing is keeping this upwards motion on the weekly. If price rolls over for the Z wave, we want to keep this upwards motion. This will allow a good chance for the market to pivot. I see this whole wave as a wave one. This wave is a wave two. We want this wave to be an expanding leading diagonal for a wave one and pulling back for a wave two. Coming underneath 11 cents, this low will invalidate this being a wave one. What it will turn into at that point is WXY if it breaks this low. But we absolutely don't want that to happen, because as you can see, this is all insufficiency and it runs the risk of dropping very low. XRP came down for 3 waves, 3 waves, 3 waves, creating a WXY. This 3 waves, we want to be an X, and if it is coming to the downside now, we want to create 3 waves that will hold at approximately 20 cents. An alternative option is that it will give this 3 waves a partner leg, that this wave in the center was a connector, and that it was going to create a bigger X wave here, getting up into this potential area. We'll talk about what it needs to do when we get on the lower time frame. So 2 options here, up or down, correct? But the big if here is it creating a connector in the middle to give this leg a partner leg to create that bigger X, or is this a standalone X wave and it's coming down for the Z wave? It all depends right now on this leg. Okay, so taking a look at this leg as it stands right now, it looks corrective to me. But it doesn't mean that it cannot climb higher. It will need to complete the C wave, most likely hitting resistance, and then pull back for an X or a B wave, and then launch up for a C or Y, which will take it much higher, potentially up to this area. Basically, what it does is create a leg that looks like this one over here. Look at the beginning of that leg. What was it? A 3-wave move. It pulled back, and then gave this leg a partner. This is how it can climb correctively on the other side. This is what we want to see for XRP. All right, so we haven't taken a look at the big picture for the DXY in a while. The way that I have the count is that it created 3 waves for an A, 3 waves for a B, and then 5 waves for a C wave, creating a W. In the middle was a zigzag, creating an X wave. Currently, to complete this move, we need a Y leg, which means we need an A, a B, and a C on the other side. If this is done, this move would allow Bitcoin to rally significantly. But the question is this A wave done? And we'll take a look at that on the lower time frame. The way that I have the count, it has it coming into its main third, which means we are looking for a 4th wave that goes with this one and this 2. I talked about this in my last video. This is minimum time requirement. As you can see, if this is a 4th wave, it has not been met. If this market turns bullish, breaks the high, then that means my count is incorrect, and that this 4th wave more than likely goes with this 1 and 2. It's a very difficult count at the bottom, and that could be the case if it goes bullish and breaks the high. Well, let's talk about time for a second. We need to be coming down into it. So that would mean a middle connector, and then this leg gets a partner just to meet minimum time. We're looking at the earliest January 30th to March 9th to put in this 4th wave. The way that I have the correction counted is 3 waves to the downside, a flat in the middle for B, and a 1, a 2, 3, 4 coming down for wave 5. This would allow Bitcoin, if it's following it right now, to rally. Hasn't been following it as it was before lately. If price comes into 106.81 before finishing this 5th wave, it will invalidate the 5th wave because it will come into its wave 1. What it will most likely mean is that it's creating a bigger 4th wave here and then plans to roll over for the 5th. Then at that point, because we have not met time for the larger 4th wave, is that it will create a connector, which will allow Bitcoin to rally, or this is not the fourth wave we're looking for, and it will go bullish and break the high. But the first thing it will do is come off the bottom in 5 waves, breaking the fourth wave territory. Okay, so last one on the list here is SPX. We have 2 options here. First option is that this is an expanding leading diagonal. We would look at it as an A wave, not as a wave 1, because if it was a wave 1, that would be extremely bearish. Extremely. So we would look at it as an A wave. This would mean it's popping out of its structure for a B, and that it's going to give this leg a partner for a C wave. The alternate count is that it created a 3-wave move for a W, 3-wave move for an X, and now it needs an ABC correction for the Y wave. How will we know the difference? Coming over the high of the potential X and 4th wave will throw it to the bulls that it is creating a rally here. I do not see this count as over. The reason of that is because the market likes symmetry. So if this is a W and if this is an X, look at the size of your W. You need the same type of wave on the other side for the Y. And if it's an expanding diagonal, then we have a whole nother leg to come equal to this one. I hope you enjoyed this video. Take a look at my website, and I will see you in the next one.